Hello everyone, welcome to Fintrekk Capital channel. This is going to be November 2022 subscribers Q&A. We have already invited questions from our subscribers, both which are present on small case and on through our websites. And we have invited these questions through a Google form. And we are going to answer some of the questions in this session. So what we have done is basically group the questions into three parts. The first is related to macros and market types. Second is about the stocks which we have invested, and third is about the uh, sectors or stocks where we have not invested but we are tracking to initiate a position in them. So out of these three, we are going to cover the last two, and the first one related to macros and the markets. We are going to conduct another session at the end of December to cater to that, because that's going to be a long sessions and it's year end also. So we are going to do a sort of a yearly review for that also. So before I take up the questions, just wanted to take you through the total products which we have launched in this financial year since Fintrekk Capital started. Uh, so this was our first product where we launched the special situation strategy on the small case. So we completed around 31 weeks recently. Uh, so you know uh, the strategy has delivered about 15% return as compared to 13% on the small cap index. Uh, what we've realized is that it's a little difficult to play the demergers and amalgamations kind of events on the small case. So there is a little bit of churn in that. But the good thing is that the economic situation is throwing up a lot of these special situations in the past few months. So we are studying them and we are tracking them, and whenever suitable, we are going to include them in our strategy and in our product. Currently, we have about 24 stocks that includes all the demerged and unlisted versions, unlisted stocks, because a couple of them have not listed actually. Uh, but I think once we all of them are listed, and we have a few situations where the stocks are reaching the event. So there might be a little bit more churn in the next quarter for this strategy. That's what we anticipate if things go according to the plan. Uh, the second product which we have launched is the same spatial situation, but that's through our website. This was started on 11th of August. And currently we have about 12 stocks. Again, in this, we have recommended 10 stocks, but one stock has undergone the demerger, and one stock has also undergone demerger, but the demerged version is not yet listed. It is expected to be listed in December. So there are total number of recommendations of 12. Uh, and I think December returns at the end of December will be a better indicator, because one of the stocks which is unlisted will also get listed, and we are looking to add more positions in the next year, especially in the first half. We keep capping this portfolio at 15 stocks at the max. So at any point of time, you'll have at least 7 to 10 stocks which are in buy recommendation. Uh, so I think one of the stocks which has undergone debt resolution recently, that has run up significantly in early part of December. That is up about 62%. These returns are as of 10th December when we are recording the session. Uh, and the drawdown has been in the stock demerger, where due to MSCI selling one of the demerged entities of NBFC, that has sort of gone down. Uh, but we are not in a hurry to sort of average it down or increase the allocation onto it, because we feel that there could be a little bit more time direction into the way results have come, and the future cash flows and the projections are related. So we are going to wait till sort of upgrade the stock in the coming days. But yeah, as of now, we have about 12 stocks, including the unlisted and the demerged versions. The third product which we have is the Wealth Compounder on our website. This was started on 3rd of August, and till date we have recommended 12 stocks in it. Uh, 11 of them are in still in buy recommendation. One of them we have put on hold in November because it has just doubled in almost 3 months. So given the sharp run up, we have put it on hold. So here a hold means that you don't need to buy or sell the stock and just hold it without any increase in allocation or increase or decrease in allocation. Uh, so this average return has been 33% since initiation, absolute basis. And so there is one stock which has done well, 100%, more than 100%. There are two stocks which have gone like 70% in 3 months. And the maximum drawdown which we have seen in one of the stocks is 6%. Again, these returns are as of 10th of December, and the exact return may differ for you, for all the clients, depending on when they have bought the stock. So we are pretty much diversified across cement, auto ancillaries, defense, IT, chemicals, and microfinance institutions. So we have a couple of stocks in auto ancillaries. We have couple in defense. We have two in chemicals, one in IT, one in microfinance, and one in cement. We are again meeting a lot of companies, studying a lot of companies. We have recommended and informed recently. We are meeting a few of the management, so whether it's through the Zoom call or in-person meeting, and we are looking to initiate a few more in the first half of next year. So our plan is to have a sort of a strategy, have a 25 positions, at least 10 to 12 are in minimum buy positions at any point of time. But that also depends on the market cycle and depends on the how the markets move. But we'll try and have 10, 12 stocks at least in buy condition all the time. Currently, there are 11 stocks in the whole buy condition. Only one is at hold. So the first questions which we got was, why did we exited India Bulls real estate? So that was our only exit from the small case. There was no exit from the web products, but there was one exit from India Bulls real estate. So so our rationale for India Bulls real estate was the merger with the embassy, and this decision, has been constantly delayed at the NCLT. Though we don't think that this is going to be a deal breaker, we think that ultimately the merger is going to come through. I mean, just for FYI, we are recording this on 10th, and on 8th of December, again the postponement till 5th of January has come. Uh, so I think we are incurring opportunity cost because of this. So we do think that ultimately the merger will come through, but the time frame is pretty uncertain. We have already waited for about 6 7 months to for this to complete, but because of certain reasons which are beyond our control, I think the decision is getting delayed. Secondly, I think we what we have done as scuttlebutt, we are not sure that the NOC from the IT income tax office from Chandigarh has come. Remember, they had an IT raid in May 2022, and we are not sure, that whether that has come, whether that is leading to delays in the NCLT decisions. These are certain things where we don't have really the clarity. So we are only hoping in this case that NCLT decision will come through. Again, the kind of shareholding which has gone into India Bulls at this current point of time, till about last quarter, September quarter, what we have seen is that there is a very high retail there is a very high retail shareholding, almost 30%, more than 30% actually. And most of the institutions which invested in QIP are actually out of this. So it's mostly retail holding, the non-promoter holding in this. Again, the money which they acquired through QIP at 102 price, that has been used to settle some of the old debts. There was a old RERA case which was going on that has been settled. There were a couple of more debts which have been settled. So that QIP money has not really gone into expanding the business, but it has gone into settling some of the old debts. Uh, there was also a case where the ex-promoter Gehlot wanted to repay to the company by 31st of December through the sale of real estate assets from London. We are not sure that, given how the interest rates are rising, the real estate is under stress in UK. Given how the slowdown has happened there in Europe and UK, we are not sure that this money is going to come by 31st of December. Uh, it may come, it may not come, we don't know. But our understanding is that this money could also be delayed. So keeping all these things in mind, we felt that better opportunities are available, uh, and we sort of took an exit considering the opportunity cost which we have already incurred in this about 6 months or so, and we think that once the merger is done, once these debt is cleared, then we'll want to have a look again whether it is we are going to invest in that and again. So from where we started, initiated this stock around I think 68, 70 rupees. So we are still making a decent profit. So that's why we exited it in November, the price. But we are keeping track on it. If the things improve on the fundamental side, then we'll probably get back to it again. But as of now, we don't see a point of being invested for the next 1 year or so. Okay. Uh, Second question was regarding how to use percentile in our web products. So what happens is, under each stock recommendation under product, when I say products, I mean the strategies which we have, whether it is special situation or wealth compounder, and this is exclusively to the strategy products on our website. So basically, percentile is a proxy for position size. Now, as per the current understanding of SEBI research analyst regulations, a research analyst cannot give a allocation, whether it is 2% or 3% or 5%, because we don't do a risk profiling of the investor. So you need to consult with your investment advisor to understand your risk profile and to then take a call. What should be the allocation to a particular stock. So we cannot give the allocation, but we have given a percentile a ranking so that it becomes a little easier for you to decide with your advisor what is going to be the position size. Now, this position size can differ from person to person. Uh, so if you have a, let's say, a low risk appetite, and you are running a diversified portfolio, then your position size could be like 2%, 4%, or 6%. 2% for the bottom percentile, 4% for the middle, and 6% for the top percentile. Similarly, if you are a much more aggressive investor and you have a concentrated portfolio, then this 2, 4, 6 could be 4, 8, and 12% in the portfolio. So, whenever we are changing the percentile, that would mean there has to be some profit booking happening or scaling above the positions. So, for example, if we move from let's say a top percentile to a middle percentile, that would mean we are basically doing a little bit of a profit taking or reducing the allocation. Similarly, if we are moving a stock in the reverse manner from a middle to top, that means we are scaling up the position. So let's say from 4% to 6%, we are moving it. Uh, Similarly, bottom percentile, we cannot downgrade it more. So bottom percentile is usually one-time entry, one-time exit kind of a scenario, because you are buying something with, let's say, 3% allocation, and as a bottom percentile, and then you are playing the cycle, playing the story, and then you are exiting that stock at a bottom percentile. So bottom percentile usually do not have a profit take; they have sort of one-time entry and one-time exits. So we have put a blog on our website also regarding the percentile. You can check it out. We'll put a link in the description box as well. So third question which we got was the defense stocks have moved up. What now? So there are a couple stocks which we have recommended to our subscribers under the wealth compounder uh, strategy, and we agree that the stocks have moved up much beyond our expectations. And that's how the liquidity works. It works on both ways, on the upside and on the downside. So it's completely possible that there could be a type correction or a price correction for 1 or 2 quarters, and that's why one of the stocks was actually put on hold. One of the defense stocks was put on hold. But we have to look at the bigger picture. This turnaround in the defense cycle is happening after many years of down cycle. This indigenization of $70 billion of defense equipment, and this is happening for the first time. So we cannot be stuck in the past, and we cannot be treating this cycle as the past cycles. No doubt there are still question marks about the working capital cycle of a lot of these companies, whether they are going to uh, face issues in working capital, whether it will get stretched or not. That's why we have recommended only two stocks and not more, because we want to see how the government is making up the payments. And now, since the stocks have moved up a little bit, we have a little bit of cushion in the cycle to see, whether that sustains or not. Because if cycle sustains, then we can have even more stocks recommended, and there is still a lot of money to be made, which is on the table and which can be made through these stocks. We are still not convinced about the PSU defense companies, but that's why we have recommended only the private defense companies. But I think one should not miss out only because we are stuck in the, whatever has happened to the defense companies in the previous cycles. Uh, so it's a sort of a growing story, and I think it's still very under-owned. If you look at uh, look at the shareholding patterns, obviously it will get a little bit more clearer when when the final December quarter of shareholding patterns comes. But I still think it's a little relatively underowned. It's definitely not undervalued. So valuations have definitely moved up the curve, uh, and we are going to see how to deal with it. For me, the most important is how the companies are delivering and how the payments are being made by the government. Uh, the final question which we have selected is that, are we looking at textile sector after correction? So we were out of most of the textile stocks sometime middle of next year, last year. Uh, so currently we are tracking, but not really have an active positions on it. So a lot of things have improved. Cotton prices have corrected almost 30-40% now. Fuel prices have come down. Working capital cycles are still stretched because higher interest rates, etc. Uh, Inventory losses have reduced, but demand is still an issue. So whatever is happening was a lot of these textile players which were exporting, which had global clients, whether it was in US or Europe. That slowdown in exports is basically what is keeping us on the fence, and we feel that this is going to continue. US may go into the recession. Europe is definitely going to go into a recession. So I think there will be a period of about 6 months or so uh, where uh, uh, where profitability will take a hit, margins will be crushed, and inventory losses might also be there. So we are tracking. We are looking for signs of bottoming of the cycle of the textile cycle. Uh, there are good things which have happened at the domestic level. That's why you'll see a lot of these apparel retail companies really zooming in the stock market because the amount there is a tight labor market. A lot of people have money on their hands, so they're going and buying the retail apparels from the retail companies. But what we are not able to see is what is happening to the global exports levels. And a lot of these companies, where the valuations have really corrected and become very attractive, they have a global exports component into them. So we are a little aware about, concerned about that portion. But once it bottoms out, I think then putting in a position would be much more will make much more sense actually. Uh, so yeah. So yeah, I think that's it. Again, the disclaimer: any stocks or sectors which we have discussed in this video, we do not have. I mean, that's not an investment advice. Please consult your advisor before taking any positions. And if you want to invest with us, then we are available at fintrekcapital.com and fintrekcapital.smallcase.com. Uh, and if you have any queries, you can email us on support@fintrekcapital.com. Thank you, and we'll connect again next month for the subscribers meet.